Yes, we are going to example 2. As per the first example, we have done that first example. So we are going to example 2 on preparation of financial statements under IAS 1. For you to continue having these lessons well, I'm actually requesting you to visit our YouTube, that is CPA Makan SIPS College. You'll be able to get our notes there, and you'll be able to get other videos relating to financial reporting. So let's come to example 2. It is the same example 2 is in our notes, and I'll actually be sharing the link so that you are able to access the questions and notes also together. Example 2 also says, example 2 states, the accountant of Wilson Company has prepared the following list of account balances as at 31st December 20x7. 50 cents ordinary shares fully paid for 50. 10% loan notes secured 200. Retained earnings 1st of January 20x7 242. General expenses, general reserves 1st of January 20x7 171. Land and buildings 1st of January 20x7 at cost 408.30. Plant and machinery 1st of January 20x7 at cost 830. Accumulated depreciation, building 2020. Plant and machinery at first balance brought down at 1st of January 20x7 222. Inventory 1st of January 20x7 190. Sales 2695. Purchases 2152. Ordinary shares 15. Loan notes interest 10. Wages and salaries 254. Light and heat 31. Sundry expenses 113. Suspense account 135. Trade accounts receivable 179. Trade accounts payable 195. Cash 126. So this suspense account is actually following us. It was there in the previous example, so we are now coming across the same in the second period. So let's see the notes. A. Sundry expenses include 9,000 paid in respect of insurance for the year ending 1st of September 20x8. Light and heat does not include an invoice of 3,000 for electricity for the 3 months ending 2nd of January 20x8, which was paid in February 20x8. Light and heat also included 20,000 relating to salesman's commission. B. The suspense account is in respect of the following items. 1. Proceeds from the issue of 100,000 ordinary shares 120,000. Proceeds from the sale of plant 300,000. Less consideration for the acquisition of Mary and Company Limited 285,000. Balance 185. So it means suspense account there in the balances carried forward as per 31st of December 20x7 is balancing with the information that was actually sort of. And I told you the other time, suspense account is mainly used to record those transactions that you need either clarification about the same, or you are not able to see exactly, you are not able to find out exactly how they were posted. So suspense account is very important for accountants to ensure that they seek clarification on specific areas that they doubt. Now in this case, they're saying this particular suspense account is balancing with the additional information number B. C. The net assets of Mary and Company were purchased on 3rd of March 20x7. Assets were valued as follows. Equity investment 231,000. Inventory 34,000. Total 265,000. All the inventory account was sold during 20x7. All inventory account was sold all during 20x7. The equity investments were still held by Wilson as at 31st December 20x7. Goodwill has not been impaired in full. D. The property was acquired some years ago. The building's element of the cost was estimated at 100,000 shillings, and the estimated useful life of the asset was 50 years at the time of purchase. As at 31st December 20x7, the property is to be revalued to 800,000. Additional information number E. The plan which was sold had cost 350,000 and had a carrying amount of 275,000 as on 1st of January 20x7. 36,000 depreciation is to be charged on plant and machinery for 20x7. Additional information E. The management wishes to provide for Roman 1. Loan note interest due. Roman 2. Transfer to general reserves of 16,000. Roman 3. Audit fees of 4,000. Then G. Inventory as at 31st December 20x7 was valued at 220,000 cost. H. Taxation is to be ignored, which means no issue with the taxation. Remember, we carried out accounting for taxation under IAS what? 12. It is actually in our previous videos. So question says required. Prepare the financial statements of Wilson Company as at 31st December 20x7. You do not need to produce notes to the statements. So this question is actually 20 marks. So let's now begin. First and foremost, we have to go through again additional information because they are the ones that will enable us to adjust the figures that are given in the question. That is the figures now given from the table given up there, that is balances as at 31st of December 20x7. So those figures will be affected by additional information from A to H. So for that reason, let's go one by one. Additional information 1. Sundry expenses included 9,000 paid in respect of insurance for the year ending 31st December 1st September 20x8. That statement means suspense account, first of all, is administrative expense. Remember, I said that there are 3 types of expenses. We have cost of sales, we have administrative expenses, we have distribution expenses, and other expenses. So therefore, sundry expenses, as shown in the question, totaling to 113, belongs to administrative expenses. Unfortunately, there is 900,000 that was paid to that was to actually cover the whole year, that is 12 months to 1st of September 20x8. You can see we are dealing with the books of 2007 or 20x7, that is to 31st of December 20x7. But this payment of sundry expenses that was purely insurance was to cover to the following period. So therefore, there is a portion that is going outside the period we are preparing. For that reason, we have to apportion by saying, now for 12 months, so from January to 1st of September, those are 8 months. So it means 4 months are for the current period, that is 20x7. But 4 months is for the previous period. What do we call that? Prepayment. So let me make adjustment on that first. So working 1. Sundry expenses. Sundry expenses. So, and sundry expenses has the following. Balance brought down as given from the question is 113. Unfortunately, out of this 113, we have 8 months for the following period. We have to remove from here because it is called prepaid. So in this case, we call prepayment. Prepaid, now it will be 8 over 12 times 9. So if you take now 8 over 12 times 9, you get 6. So if you subtract correctly, your answer should give you the answer there should be 107. So this 107 will go to administrative expenses. 6 will go to balance sheet as prepayment. Correct? Then on the same note, we have also been told heat and light. So working number 2, heat and light. So they're saying balance brought down according to heat and light is 31. Then they are saying that does not include an invoice of 3,000. We are dealing with 1,000, so we'll record 3. So in this case now we are going to say not including, we call it accrued. So there was accrued of how much? 3. Then it continues and saying light and heat also include 20,000 relating to salesman's commission. Salesman's commission should go to selling and distribution expenses. So they have been classified under administrative. So it is wrong. We remove that commission. We remove commission. This one belongs to selling and distribution. So when you subtract this carefully, if you subtract that figure carefully, your answer is 14. So 14 will go to administrative expenses together with sundry expenses. But 20,000 will go to selling and distribution. Correct? Then additional information number B. The suspense account is in respect of the following items. Proceeds from the issue of 100,000 ordinary shares. Then proceeds from the sale of plant, 300,000. Then less consideration for the acquisition of Mary and Company, 281,000, totaling 135. So it is balancing with the suspense account. So we are not going to open journal entries like the previous example. So here suspense account is automatically balancing. So I want you to get the difference between this suspense account given and the one we did from the previous example. So now in this case, our work will be very simple. We are now seeing some work here. That is additional information working number 3. We have the issue of shares. This issue of shares here is totaling to 120. When we are issuing shares, we can either issuing it at par or we are issuing it at premium. When we are issuing at premium, it means we are issuing it above the carrying amount. If it is above the carrying amount, we treat them as share capital. Then carrying amount now will take the par value. In this case now, let's see. From the question given, let's go to where the ordinary shares is. The ordinary shares in the first part, 50 cents ordinary shares, 450. So they are saying 50 cents, meaning one ordinary share is equals to 50 cents. Correct? Now, if you want now to know how much was issued under ordinary shares, we will now say, yes, under this information, you can say ordinary shares, share capital will be 50. 50 cents is the same as 0.5 shillings. Then you multiply by how many shares were issued? 100,000. You put it 100. So you can see that 100 to give you 50 shillings. Then it has to total to 120. This figure here. It has to give you. So it means the balancing figure is share what? Premium. Which is 70. So this one will be share premium and 50 will be ordinary share. So we have now dealt with the shares. We proceed. Proceeds from the sale of plant is 300,000. So when they were selling this plant, they sold it at 300,000. And when you go back to additional information number E, they are saying the plant which was sold had a cost 350 and it had a carrying amount of 275. So that proceed, we can now work out and find out where there is gain. How do you get gain? Again, you take the proceeds minus cost. In this case, we are talking about carrying amount. So we can now say gain on disposal. Gain on disposal now, I will take the proceeds, which is 300, minus the carrying amount. In this case, carrying amount is, according to additional information number E, a carrying amount of 275. So we are not going to use cost because there was a depreciation. From 350 to 275, there was a depreciation. So therefore, for us now to find out the proceeds, the gain or loss, we need to take the proceeds minus carrying amount. So the carrying amount in this case is 274. So if you subtract this carefully, your answer you get is 6 there, 10, this is 9 minus that is 2, 26. So there was a gain of 26. Now the 350,000 will go automatically to our PPE movement schedule. And then the difference between 350 and 275 will give us depreciation for this particular disposed asset. So in our PPE movement schedule under depreciation, we shall be saying, remember the format was saying you take the accumulated depreciation for the previous year, add depreciation for this year, minus any depreciation on any disposed asset. So we are going to use the same concept to work out on this. Now, on the same note, additional information number B, we had been told that there was also consideration for the acquisition of Mary and Company. Now, for that case, we have to go back to additional information number C, whereby it was saying the net assets for Mary and Company were purchased on 3rd of March 20x7. Assets were valued as follows. We have equity investment of 231,000, inventory of 34,000, totaling to 265. The net assets in this case is 265. But how much was paid to acquire this particular company called Mary and Company? They paid what? They paid how much? 285. So there is a topic ahead of us called group accounts or consolidated statements. So for us to calculate goodwill, so working number 5, for you to calculate goodwill, you take consideration cost. Consideration is the amount payable or paid to acquire that particular item, company, 285. Then we have net identifiable assets, NANIA, net identifiable assets. In this case is 265. I think so, 265. Let me check. Yes, 265. So the balancing figure, if you subtract this, you get the goodwill of 20 shillings. Goodwill is an intangible asset, so it belongs to intangible asset automatically belongs to the balance sheet. Now we have, so goodwill is take consideration cost. We shall be covering again the same under consolidation of financial statements when we are buying. So this one, don't worry about it, but just understand goodwill is taken by consideration minus net identifiable assets. So net identifiable assets, these are assets that you are buying from that particular company compared with what you are paying. If what you are paying is higher than what you have bought, that is what? Goodwill. But if what you are paying is less than what the assets you have bought worth, that is capital gain. It's like a capital gain. But in this case, you have paid more. That more amount, that more value is what we call goodwill. We shall be explaining more about the same when it comes to group accounts. Correct? C. So we go to C. The net assets I've already analyzed C. I'm through with the C. The property was acquired some years ago. The building element of the cost was estimated at this one. So this one now will lead now to property, plant and equipment movement schedule. Movement schedule. Why? We said under this particular topic, we are not going to recognize assets as individual, but we put them under PPE, that is IAS 16. So let's see the format. The format was saying you need to have the total. In this case, it is in thousands. We have the land there. I've been told there is a building. Then there is plant and machinery, still in thousands. Okay, so let's see now. In this case, I am going to show them at cost because that's what I've been told. So in this case, there is now a balance brought down at cost. All at cost. So let's go to the question. Let's go to the question. The question says land and build, where there is now property, plant and equipment. Land and building 430. So 430 is land and building. So these two. But we have been told building is 100,000 according to additional information number C. Then if it is 430, the balancing figure is 330 belongs to land. Then plant and equipment, we have already been given there as 830. That is the cost. Then we also said under this format, if there is any additions. From this question, we don't have any additions during the year, so it will be dash, dash, dash. But we have disposal. So we have a disposal of property of plant and machinery, 350. Disposal means it is reducing. So in this case, there was no disposal on building and there was no disposal on land. Now, then we add. This gives you, or subtract, this gives you that 8, 4. This gives you 100. This gives you 330. Correct? Then you are through with that part. Then we go to depreciation. Depreciation here, we have the balance brought down, that is accumulated depreciation for the previous years. You have been told from the question, building is 20 shillings. Building here, 20. Then you have also been told plant is 222. But land does not depreciate. Then for the year, according additional information number E. Now additional information number E says the plant which was sold had 350,000. You can see there, and had a carrying amount of 275. Carrying amount is to calculate the gain here. You can see the gain is here. Then, as at 1st of January 20x7, then 36,000 depreciation is to be charged on plant and machinery. 36,000, which means that is the depreciation for the year. So you put it here. There was no so this one there is a depreciation. There is an information given there. Additional information number E. The building element of the cost was estimated at 100,000 shillings, and the estimated useful life of the asset was 50 years at the time of purchase. 50 years. So the reason why you are given that is for you to calculate depreciation. So I can now say 100 divided by 50 years, I get 2. So this 2 is what I'm going to put there. There was no depreciation on land. Then there was depreciation on disposal. Remember the disposal? We are taking what? How much? You took 350 minus 274, right? So there was a depreciation on disposal. So if you subtract that, you are supposed to get the figure as 76 here. Correct? So depreciation on disposal is subtracted from the total. So therefore, how much is the total depreciation? So if you work out this one, it has to give you 182. This one has to give you 22. And this one has to give you dash. Then it sounds the net book value or carrying amount is now this minus this. So if you subtract carefully, you get 298. Subtract now this minus this, you will get 78. Then this one will give you 330. Correct? Now, from here, we now want to do what we call revaluation according to additional information number E. The last part of number E. As at 31st December 20x7, the property is to be revalued at 800,000. Which property is that? Land and buildings. Land and buildings is being revalued to 800, which means that these two, this one and this, is now being, when you add the figure between the total between this and this one should give you 800. So therefore, I will now say, okay, revaluation is 800 minus 78 minus 330. So if I subtract this, I'm getting my answer is 392. Correct? So these two, 392 is our revaluation. So which means when I add this plus this, my answer should be 800 for that matter. Therefore, this one is not depreciating. So this one is not being revalued, but this one is being revalued. Therefore, it means that this 392 need to be apportioned between between building and land. So let's apportion this. So I can show now working here, workings on revaluation apportionment. So in this case, for land, you take the value of land, that is 330, divide by the total. So it means this plus this, you get 408. Then you multiply by revaluation, which is 392. The same applies to building, which is now 78 divided by 408 times 392. So if you work it carefully, your figures you need to find there is, for this one you round off, it will give you 317. This one has to give you 75. So that when you add, you get 392. So therefore it means that revaluation for the building will be 75 here. And revaluation for land is 317. Correct? So that when you add this plus this, it will give you this. So therefore, the total net book value is this plus this, you get 298. You underline that. This gives you 13,153. You add, this one is 746. So that now, this is now the total value. So in this case now, when you add now this plus this, you get 1098. This one now, 1098. So this 1098 is what will appear in your balance sheet. 1098. You can see how to get it. Now, on the same note, I think let me work out also on others. So working number 6, working number 7, cost of sales. Cost of sales, I can now say opening stock, purchases, and then closing stock. Now, on the opening stock, we have already been given in the question. Opening 1st of January 20x7 is 190. So you put your figure there, 190. Purchases you have already been given, 2,152. But there is something that is happening there. According to additional information number C specifically on inventory of 231 that was purchased from a company called Mary and Company Associate. So let's read additional information. All the inventory acquired was sold during 20x7. All inventory acquired of 34 shillings was all sold. Meaning that if it was all sold, then there was no amount remaining. So therefore there were purchases. So it will affect these purchases of 2152. So therefore I will now say 2152 plus 34. Why? Because all the 34 was sold during the year 20x7. There was no balance remaining. If the question was saying this 34,000 that was bought from Mary and Company remained in the books of accounts by the end of the financial year, we could have taken it as what? Closing stock. But at this time they were all sold. Meaning that when the sales purchases revenue there, it was credited, then we debited any debtor or our customer. So for that matter, that is how you are supposed to work out. So closing stock, we have also been given closing stock additional information number last head FGG 221 220. So if you add this plus this is 6. This plus this is 5. Then we have also 5. plus this is 6, this plus this is 8, sorry, 8, this plus this is 8, then we have 1, then 2. So work out 190 plus 2186 minus 220. So you take your calculator and work out that. It is 190 plus minus 220. So your answer here is 2156. So 2156 is our figure to go to the cost of sales. Remember, we are saying you are not supposed to show this one as independent. Then we go to administrative expenses. So allow me to work out this. Working number 7, 8, administrative. Administrative, one of it was sundry expenses. How much is sundry expenses? 107. Any other administrative expense? Heat and lighting, eh? Yes, it is here. Heat and lighting. How much? 14. Any other? We said this is accrued expenses. Yeah, I've already worked out that. Any other expense? Any other administrative? So if there is none, I check now from the question if there is any that I've not used. We have salaries and wages. Salaries and wages. How much salaries and wages? 254. 254. Any other purchases? Any other? Additional information number F. Management wish to provide Roman A loan not interest. Loan not interest is under finance cost. So that is not administrative but under finance cost. A transfer to general reserve. This one we shall be preparing our equity statement of equity, statement of changes in equity. General transfer of general reserve will go there. Audit fees administrative. Audit fee of form. So if you add now that, it has to give you the figure that you are supposed to use. So you add this. Then we go to now our selling and distribution. Selling and distribution expenses. So working number 8, 9. Working number 9. Selling and distribution. Now selling and distribution, according to this one, we have commission. You remember commission given to the salespeople? Yes, of 20. Well, do we have any other? From additional information, there was nothing. Now we go to working number 10. It's purely about interest. Now interest here, for the year, you take 10% of 200. You will get 20. Then paid, we have already paid. In the question there is a note says loan note interest 10 shillings. 10 means it has already been paid. So you subtract that. So what is unpaid? Unpaid there is 10. You can see that unpaid is 10. So therefore, this is an interest not paid, but this has been paid. So what does it mean? It means that 10% of 200 will go to your, this one will go directly to your statement of profit and loss. But this one here will go to the balance sheet as liability. Balance sheet as liability. Now, we can now go and study and work out directly on the statement and on our question that we have just been asked. So the question is very simple. it is asking us to prepare some information. But before we do that, I want to finalize on this area, on some additional information before now we prepare our workings. So let's work out on number, on accrued expenses number. This is 10, this is 11, accrued expenses. So these are expenses that were incurred in the year 20X7, but they were not paid, but they are now carried forward to 20X8 because of non-payment. In this case, we have interest on loan. We have interest. Which one? This 10. On the same note, we have also the provision, additional information number, the last additional information. Management wishes to provide for. So that statement alone means that there was no payment in this case. Okay? So expense there is expense there is audit fees. Audit fee of how much? 4. Then, was there any other that was not paid? Yes, additional information number 1. There was heat and light. Heat and light of how much? 3. Was there any other? No. I think there was none. So if you now try to add all these, your answer you will get is 17. As what? Accrued expenses. So we are now through with our working. So let's go now and do our calculation direct. Yes, so let me work out straight. So you begin with the income statement or a statement of profit or loss account. So the company is the name of the company is called what? Wilson Company. Wilson Company. So Wilson Company. Statement of profit or loss and other comprehensive income. Yo. So this one we are dealing with thousands. Now we have revenue from the question. There was nothing affecting our revenue. So revenue there is 26.95. 26.95. Cost of sales we have already worked out. You can remember the cost of sales. We have already worked out, and when you added it very well, you are to get 21.65. Then if you subtract, you will get a gross profit of how much? 590. 21.56, sorry. You get 590, 539 gross profit. Gross profit. Correct? We have gain on disposal. Gain on disposal. So you remember the gain? We said if it is a loss, we put it under other. This is other incomes. So let me put it under other incomes. Then this is gain on disposal. So how much? We found it to be 26. 26. So when you add now that, you get 5, 15, that is 5, 6, 5. Now we go to expenses. Expenses that we had administrative expenses. The one we have just worked out. we found it to be 437. 437. Then we have selling and distribution. No, this is 417, sorry. 417. Then we have selling and distribution. You remember we worked out that was commission, we found to be 20. Then you add, you get what? 437. You subtract, you get what you call operating what? Profit. Operating profit. Then from there we have finance cost, which I said you take the total, both what you have paid and what you have not paid. In this case it was 10% of 200. You get what? 20. You get your 20. So if you subtract now, work it out very well, your answer you'll get is 108. Profit for the year. Profit for the year. In this question we have been told ignore tax. Ignore tax for this particular case. If it was tax, if there was any tax, you could have calculated, because we have the previous tax, deferred tax, which need to be added. So this question is it is still not comprehensive, but we shall be doing more comprehensive questions on the same. Now, immediately under that, we have now other comprehensive incomes. We have also other comprehensive incomes. We have also other comprehensive incomes. In this case now we have a revaluation on the PPE. Revaluation of PPE. We found it to be 392. 392. We found it to be 392. So if you add now, you get 005. So your profit, that one now you'll have what we call profit for. You get now, that is a total comprehensive income. So we are told prepare the financial statements. So financial statement number 1. Financial statement number 2 is to analyze statement of changes in equity. Statement of changes in equity. Statement of changes in equity is purely about retained earnings, general reserves, revaluations, and any other surplus. So in this case, we just need now to analyze and find the answer straight. So we can have a total here. We have share capital. Correct? We have share premium. We have general reserves. We have revaluation. So they are in thousands. Like that. Now we go one by one. Was there a balance brought down? For the valuation, none. For general reserve, yes. There was a general reserve evaluation of how much? General reserve evaluation class of how much? 171, You get 171. Then there was also share capital of 400, share premium, there was none. Correct? But there was share capital of how much? 450. 450. There is one missing here, retained what? Earnings. So was there any retained earnings brought down from the previous year? Yes, there was 242. Correct? Then profit for the year. Profit for the year. Profit for the year, we are found to be profit for the year, just come and copy 108. Note, yes, 108. Revaluation, so there was none, like that. Revaluation. Revaluation, we found it to be here. How much? 392. This one you are seeing here. Then there was dividends paid. There was dividends paid. How much was dividends paid from the question? From the question you are given 15 was paid. How do you pay the dividends? You pay the dividend from your... Remember I said when I was teaching the notes, I said dividends proposed should not be used to calculate each statement of changes in equity. Dividends proposed will appear as a note in the financial what? Statement. They are just notes. But if it is a dividend paid, it automatically affects statement of changes in equity. That's why you have not seen me including here. Correct? It will affect your statement of changes in equity. So you pay these people, then they go with that amount of money. There was also another information called general reserves transfer. Transfer, it was given in the last note that there was a transfer of 16,000 of general reserves, which means you are removing from where? Where do you remove that from? You are removing that. You are removing now from your profits to general reserves here. Correct? And then there was issue of shares. You remember issue of shares? We found 50,000 for share capital here. 50,000 for share capital, and we found 70 for share premium. The rest are a dash dash. Then from there you add. So general reserves, you are removing them from profit to general reserves account. So let's see now the balancing figure. So if you add all this one, you are getting 500. No, not 500, but retained earnings. If you work out for retained earnings, you get 319. 319. Evaluations, you get 392. For general reserves, if you work it carefully, you get 187. Then share capital, you get 70. Share premium, so you then get here 500. So in your balance sheet, under equity, you will transfer this, transfer this, transfer this, transfer that, transfer that. Then you would have finished your work. So let's go to the balance sheet. Let's go to the balance sheet now. Let's go to the balance sheet. So we said balance sheet here is where it is changing. So it's the name of the company, Wilson, then statement of financial position as at 31st December 20x7. Then we are saying you take the assets, then you now say non-current assets. Non-current assets, we have the PPE. Now for the figure for the PPE is already in the PPE movement schedule. We found it to be 1098. 1098. Another element that will affect here is goodwill. We calculated goodwill and we found it to be 20 shillings. According to additional information, there was also equity investment. Equity investment. Equity investment, we found it to be how much? Was it 231? Let me check. Let me check equity. I think it was 231. 231. 231. You add. Then we have the current what? Assets. Current assets. Current assets, we have inventory. We have receivables. We have prepayment. You remember the prepayment? Yes. So in this case, your work will be very simple. Inventory, closing inventory we found to be 220. Receivables in the equation it is 179. Prepayment we found it to be, there was a prepayment of how much? 6. You remember the 6? Then there is cash. How much is cash? 126. So if you add all that, you add it all, you find 531. So all this you get now, the figure is 1883. That is total what? Total equity, total assets. Total assets. Total assets. Then you go to equity and liabilities. Equity and liabilities. We have equity here. Equity now, you go back to our question. We had already done statement of changes in equity. We have now 50 shillings cents ordinary shares. We have made adjustment and we have found to be 500. We have also worked out on share premiums. You remember the share premiums here. 70. We have also found revaluation. Remember revaluation? 392. We have also worked out on general reserves. The reserves, it was 187. Now if you add this, you will get 1468. Now we go to liabilities. Do we have long term? Yes. We call them non-current. In this case, we had 10% what? Loan stock. 10% loan stock is how much? 200. Then we have current assets. Which one of them is accounts payable? Accounts payable. How much is accounts payable from the question? 195. Because we have some more, I need to put there 195. We have accrued, remember accrued expenses we have put together. We have consolidated together interest, audit fees, and we have also heat and light expenses, and we found to be 17. You remember 17? Yes, so you add there 17 total. This plus this is that 12. This is 12, carry 1. This was 10, 11, carry 1, 2. So we have 212. So if you add now, if you add carefully, your answer you're supposed to get is 168, 212, balancing figure. So if you add it carefully, you will be able to balance the element. So 1883. So that is how you are supposed to work out this particular question. So you can see it is consuming when you are dealing with additional information. But once you are through with additional information, everything is just simple to the end. So I will be doing other comprehensive questions on the same and to build on this particular topic. So thank you so much and have a wonderful time. Like, subscribe and refer your friends to this particular YouTube lesson called CPM Akan CIPS College. Bye.